So this is what actually transpired, because I was supposed to be in the CNBC studio for doing some recording for a special session, and I was not really going to be interviewing on the markets. But because I was there and the market was crashing, they got me on. But while I was waiting and sitting around, I was giving up on what I said yesterday, because I said 24520 did not break. So maybe there's a case for a last spike, and we've been waiting for a clear sign whether it's going to go up or down from that range. And it finally broke down today. So, almost while I was giving up on it breaking down in the short term, it bounced back. Now, having said that and having that happened, the next thought became that, okay, then what should we really be looking at next? Then is it really going to bounce again? Because it looks like the way it was falling in the morning, it's like this is it, it's over. But what I do remember is I was studying the daily swing, daily momentum swing on strike day before, and the level had come to 33, and I was hoping that the last sell-off it will come down to some 20 kind of levels, which it is, I think, tried to do intraday, but not on an end-of-day basis. And so I called up Jay from there, before I went into my actual interview, and I asked him what is the daily swing, and he said it's 6 to 7 readings that are coming in, and then we tried to think of where the support is, and the 20 DMA was at 24,184, and that's where we were coming very, very close to. I said, fine, then this is it. Because if we are so oversold and you're at the 20-day moving average and the market has to bounce back, whether it's a retracement or a new high, either way, this is probably a very good level for that to happen. And so that ended up becoming a very good short-term entry point. Now, people then go and look at, okay, but what is your overall view? You're bearish on the market. Of course, I have been bearish on the market. I still am. But that doesn't mean you can't get a counter trend rally. And inside that, you have to keep navigating these points. And so, since you didn't break the 20-day average, you didn't get an RMI sell signal on the daily chart, the case for upticks was still open. And we looked at this as an important indication. So now if you actually see my CNBC interview, and it's actually live, so whatever I'm saying is not out of the blue. In fact, there's another interview I did 2 days ago on Upsurge explaining exactly this, that the swing in the short term was telling you that the market would dip maybe 200, 300 points. I don't know, but there'll be a dip. But the positioning, which is the slightly more medium-term sentiment, is saying that before a fall, we still need to go a little higher, because all the shorts are not out of the system as far as FIs are concerned. Now, this was a dual view. This I gave 2 days ago, recorded on Upsurge. It's on YouTube. My CNBC interview from today is also on YouTube. So I'm not just making this up, because some people are coming on Twitter and saying, "Ye to bana raha hai," So if you don't follow me very, very closely, and if you don't know how to do this yourself as a trader, you're not using data analytics, you're not using strike, again I'm repeating, because if you're going to do something like this, you have to have it data backed, and you have to have a trade setup which you believe in. Now I have both, and I've made both available on strike. So everything I do, everything I use, every tool, anything and everything is now on strike for everybody. I couldn't have done it better. So I don't use anything else but the tools over there. There's no more Excel sheets of indicators that are hidden and some secret sauce. The secret sauce is strike. So that gave us the indication. I spoke about it day before, how you could have judged what may happen. Then I spoke about it yesterday, and I've spoken about it today through the day as it develops. So that shows you my morning feelings, which is all the emotions of a trader. Then my actual CNBC interview after looking at the swing, which is also published on the strike platform. And the end result of that yes, we got an oversold reading, market bounced back, and it's come right back to the previous high. It's still not surpassed the recent highs. I'm not expecting an all-time high. But what it has opened up is that yes, we are still not done with this bounce. We are still not done with this retracement. And that is what it's all about. Eventually, stay tuned. So catch you all next time. Thank you.